AI darling NVIDIA recently became a $2.2 trillion company after more than a 650% return in less than 18 months. But is that kind of growth possible from here? To produce that same return, it would have to grow to a $16 trillion company, greater than the 10 largest US companies combined, including Apple, Microsoft, and Amazon, growing the NVIDIA beast to half the size of the entire US economy. Hey Bowtie Nation, Joseph Hogue here, and while I am loving me some NVIDIA returns, up 388% in my own portfolio, it's going to get a lot harder to pack on that kind of growth in the future. And while we've highlighted some billion-dollar AI stocks and videos recently, companies with strong return potential, nothing compares to the return on penny stocks. For example, recommending shares of SOUN AI last month when it was still under $5 a share and below $1 billion market cap, the stock is up 125% in less than a month. Even if it were to grow to a $20 billion market cap, still less than a tenth NVIDIA's size, would be a 10x return from here. So for this video, I want to show you the 5 AI penny stocks I'm watching with the potential to become those next 10x stocks in your portfolio. Stick around and I'll reveal what to look for in these companies and how to construct a complete AI stock portfolio from penny stocks to growth and even an AI ETF to round it out. We're starting with $550 million Nerdy Inc., ticker NRDY, because I like the name. Nerdy is a platform for live online learning using technology to scale the business efficiently through its 3,000 subjects, from one-on-one to small groups and large groups. Online learning is a large market of up to $62 billion, with that solid growth in the transition from traditional to online platforms. But the problem here is that the market is extremely fragmented, with a lot of these smaller providers, few of which have been able to provide any kind of competitive advantage or profitability. Nerdy believes it's found that advantage though in its layered use of AI. First, in identifying the highest quality experts for the platform, then in matching students with the best experts for their learning style, and in student interactions to optimize engagement and collaboration, and finally in personalizing the learning path for each student. Through this list, I'll highlight the market cap or revenue growth over the last year and the profitability in that EBITDA margin for each AI penny stock, but double check these because they move fast. I've had to re-edit this video and table 3 times because these market caps and share prices change so fast on these stocks. Nerdy booked a strong 19% revenue growth over the last year and is expected to grow sales by 23% this year. Like most of these small, new companies, it's in that growth at all costs phase right now, so profitability is an issue, but it's a lot better than many of the penny stocks we see here. And that is an important point I want to make. You're going to notice I'm not highlighting all the stocks in this list because some of these could be a lost cause, even on that booming AI theme. I'm going to show you what I'm looking for next, but whenever you invest in penny stocks or a growth theme, you'll want to strike a balance between that growth and profitability. You can see that most of these are far from that kind of profitability that's going to create that long-term returns, and many don't even have the growth that's going to help them take them to the next phase in development. Nerdy has that growth though, and if it can prove its advantage in AI against other platforms, that growth can turn into profitable earnings over the long run. We're just getting started on our list of AI penny stocks, but Nation, you know I'm not about to just drop a list of stocks in your lap and say go buy these. I want you to know how to find these and what to look for to decide which go into your portfolio, because you can see the growth and the margins of these. Some of these are about as scary as finding out your mother-in-law is moving in permanently. First, as with all penny stocks, you want to check that cash flow and the cash balance. Cash is oxygen for a small penny stock company, vital for the company to survive while it grows into that revenue and into profitability. So here on the Financials tab on Yahoo Finance, or really any investing platform, you're going to find the cash flow statement. You want to add up the operating and investing cash flow. This is the cash generated or spent in that core operation of the business and the cash investment needed to keep the business going. This is usually going to be negative for those small, fast-growing companies like we see here for Nerdy. The company is still operating at a loss and is investing a lot into that growth. What we like to see, though, is that negative number trending lower over time, so getting closer to cash flow positive. You also want to look at this end cash position number, the cash reserves used to pay these negative cash flows. As long as the company has enough cash, that vital oxygen it needs to keep covering the negative cash flows, then there's a chance growth can catch up. You also want to look through a company's presentations and those of its peers to find the total addressable market, that potential market size for its product. It might surprise you that one of the very first questions I would always ask of startups as a venture capital analyst wasn't about the product's competitive advantage, why it was better than others. It was, what is the total addressable market? And that's because in these types of small penny stock companies, the big question isn't whether the product can take market share and grow revenues. The question is whether it will even be worth it if they do. For example, we see here Nerdy is estimating a total market for US direct-to-consumer learning at around $62 billion. So my job as a venture capital analyst and your job researching penny stocks is, even if the company can only carve out maybe a 3 to 5% niche in that market, is that going to be enough to drive the revenue and that 10x return I want for the risk? Last one, and we'll get back to our list of AI penny stocks, but this one is specific to the group. Does the company have defensible and protected intellectual property or patents, something that is going to be hard to copy? Now, by the time the company lists its shares on the exchanges, even as a penny stock, this is usually better established, but I've seen startups and even more than a few penny stocks with their entire model built off Amazon Web Services. Folks, most people don't know this, but building a model from an AWS foundation is cheap and easy to do, but it means that model may not be a defensible asset of the company. So it's important that you understand what the company really owns and if it can be copied easily. Up next, Lantronix, ticker LTRX, reached a cash flow profitability last year and is a strong player in that IoT theme driven by AI. The company operates in its three core areas of software as a service, value added, and hardware to industrial users, and could be expandable into other customer verticals. This one is the second smallest on the list at just $135 million market cap. Weak revenue growth over the 2022 to 23 period is starting to turn around, and I really like the profitability story here. Management is forecasting at least 18% revenue growth this year, with as high as 26%, along with 50% growth in its earnings per share. Now, these shares dumped hard, 33% on the company's recent earnings, but it wasn't as bad as investors took it. Lantronix booked $37 million in sales, up 18% from the year ago period, and lower net loss per share. Even better, though, the outlook was for revenue to keep growing and for the company to get even more profitable. It's something we've seen a lot in these AI stocks lately. Investor expectations is getting way too high and sending a stock lower even on a great quarter. What I like most about Lantronix, though, again, is that it reached cash flow positive on an operational basis last year and blew past it over the past 12 months, generating nearly $20 million in free cash flow. With continued growth, it should dig out of this recent investor disappointment and take the stock price higher. I highlighted One Stop Systems, ticker OSS, in a previous video on its market-beating returns for the first 2 months of the year. One Stop designs and manufactures transportable computer systems with AI capabilities. It's a prime contractor to the U.S. military for its rugged and mobile designs. Lately, it's also emphasized expanding into commercial platforms to keep growing. Those key drivers, defense contracts and new commercial, have driven a 21% annualized sales growth over the last 5 years. OSS sees the military moving quickly into AI to maintain that tactical advantage and has announced some strategic wins lately. The company announced its first multi-year, multi-million-dollar contract with the U.S. government in November and is expected revenue up $3.5 million over the next 3 years. It also signed 3 major contracts with the U.S. military over the last year worth nearly $8 million in revenue. Shares jumped 59% in the first 2 months off a rough 2023, but investors are worried about that revenue growth going forward. It's close to that break even on profitability, but with sales down 8% over the last year, OSS is going to need to prove it's still a growth stock. Still at just $75 million market cap, it's the smallest I'm highlighting in this video, and any positive surprise could jumpstart the shares. Our next AI stock is giving investors a second chance to buy, but if you've ever wondered what's in my portfolio or wanted to see the stocks I'm buying, you can now by joining me on the Blossom Social Investing app. The app was created by YouTuber Brandon Beavis for investors and by investors. I just started using it last year and love the app for getting ideas and sharing my own portfolio. Now, this isn't just any other investing app, though. You can connect your brokerage accounts or just input your portfolio to track all your stocks in one place. You're going to see insights like portfolio percentages and average dividend yield across the entire group. You'll also be able to join more than 90,000 investors in the social feed to see what everyone is talking about. Now, I've shared my portfolio on the app and it's totally free to download, so look for the link I'll leave in the description below or just click on this QR code. BigBear.ai, ticker BBAI, also made our list of AI stocks beating the market with an 88% run following a price that nearly tripled last year. Big Bear is in one of my favorite themes within AI, helping companies make sense of the overload in data. They help companies organize and visualize raw data and then turn it into actionable insights. Now, this is key and really the first step in AI, just managing all that data collected and then being able to make sense of it. That's helped Big Bear grow its customer base and a $206 million backlog for revenue. It's also produced some major wins recently, including exclusivity with L3 Harris and a $32 million award across 3 contracts with the U.S. Army, a relationship that has grown 235% in the last 3 years. Shares did crash hard after a disappointing earnings report, but are now in second chance territory for long-term investors. The company reported just 0.5% revenue growth in the fourth quarter to $40.6 million, though it was able to boost its gross profitability to 32%. The company was able to report a positive EBITDA of $3.7 million on a non-GAAP basis versus a loss of $2.5 million last year, so it is definitely moving in the right direction. Management expects full-year revenue as high as $215 million, which, while it would be 38% growth from the last year, was slightly below analyst forecasts, and the stock price paid for it, falling 32% on the day. The stock is now at a $500 million market cap and under $3 a share, with the valuation down to 2 times on a price-to-sales basis for a stock expected to grow revenue by 27% this year and 15% next. We've still got another penny stock to highlight, plus how to create a complete AI stocks portfolio and how to invest. But to do that, you're going to need the right tools to analyze these stocks. For that, check out this video with the most important measure I used as a venture capital analyst, the Rule of 40, and how it's going to help you find the best stocks to buy. SOUN AI, ticker SOUN, is quickly becoming the stock I wish I had bought more. I recommended the shares at $3.70 in February, just before the jump higher after NVIDIA reported a stake in the company. I then added to my position after the stock plunged 33% on a disappointing earnings report, but shares are already back over $8 and over $2.5 billion market cap. In fact, this one isn't technically a penny stock anymore based on that $2.5 billion market cap, but it's still a small company with a lot of long-term upside. SoundHound is a leader in the conversational AI to businesses that can be used to build AI assistants in more than 25 languages. Of course, that market for AI assistants could be ginormous, even larger than the $160 billion enterprise market that SoundHound is estimating. While earnings were a disappointment, it's hard not to be happy with this kind of growth. SoundHound reported 47% growth in revenue and a net loss that almost halved. They've got a long way to improving that profitability, but the revenue growth should continue, and I'm still buying more of this for that long term, even after the run. We've highlighted quite a few AI stocks over the past 2 weeks, so I want to show you how to put all this together into a growth portfolio that's going to ride that tech revolution higher. Because no, it isn't just about rushing out to buy every stock I talk about here on the channel. Nation, putting together a great portfolio that not only produces those high returns, but also spreads your risk out across themes to make it as stress-free as possible is about being picky with the stocks you buy and devoting segments of your portfolio to different themes. So here you might start off with 20 or 30% of your portfolio targeted for AI stocks. For example, in a $100,000 portfolio, maybe you split out $25,000 of that across 10 AI stocks you really like. That's going to leave the rest for other themes like electric vehicles, dividends, value stocks, or whatever else you might come across that looks like a really good investment. Then within that $25,000 targeted for AI stocks, separate that by industry, so maybe 2 or 3 stocks from each of hardware, software, and services companies. This way, you're going to get those immediate returns we're seeing in the hardware semiconductor stocks right now, but we'll have the stocks that are going to benefit when AI moves into that next phase, that software, and then services. You'll see your portfolio grow through this evolution of the theme. And of course, maybe you reserve 5 or 7,000 of that AI stock portfolio for those high-risk, high-return penny stocks we talked about in this video. You'll have a diversified list of AI stocks across industries and company size for that solid long-term return. Join me on the Blossom app with the link in the description below and see all the stocks in my portfolio. Or click on the video to the right for the AI stocks beating the Rule of 40, the top measure I use to find growth stocks. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.